Hello and welcome to Financial News. Today's recording is done on December 9th, and my name is Paul Munichel. I am a financial advisor with Ameriprise Financial. Ron Jankowski is off on vacation, so I will do the show by myself today. And I have prepared some notes to begin, basically recapping November's market recap and talking about equities and their continued rally. So let's go ahead and begin. Equity markets continued to rally in November on the back of supportive economic data and sustained optimism regarding U.S. and China trade negotiations. Domestic equities outpaced foreign stocks during the month of November, reversing a two-month trend of foreign outperformance as the S&P 500 outgained the MSCI All-Country World ex-US index. We beat them by 3%. Emerging markets failed to keep pace and also developed market equities as the MSCI Emerging Market Index ended the month marginally lower. Hong Kong-based emerging market constituents led the November losses as political unrest in that country and region continued to weigh on their markets. Moving over to fixed income, it was mostly flat during the month as narrowing credit spreads were offset by a modest rise in U.S. government bond yields. The 10-year Treasury yield ended the month at 1.77%, with the trade range seen early August as modestly below our 2% year-end target. Investment-grade corporate bonds and high-yield bonds led among bond sectors, while foreign developed bonds were a notable laggard as several developed market currencies depreciated against the U.S. dollar during the month. Finally, looking at alternative strategies, broadly they delivered modest gains in November, with most styles producing positive returns. However, commodities posted the worst performance of a major asset class as energy, metals, and agricultural commodities all lost during the month. So depending on where you're invested in the month of November, domestic equities did very well. Foreign equities did, I would say, okay. And bonds did modest. And alternatives, depending on where you're at, you could have done pretty well or pretty poorly. November is in the rearview mirror, of course. Now we are firmly in December and hoping for that Santa Claus rally that we often get in December. We've got some big trade news coming due on December 15th, so the market is anxiously awaiting that news. Things you need to know for this current week. Domestic equities are weaker Monday morning as investors monitor again the trade developments we've talked about, including potentially new tariffs on imported goods from China on that December 15th deadline. That's a very important date to watch this month, is December 15th. The 10-year Treasury yield is slightly lower as the FOMC hosts its last policy meeting of the year later this week. People are anxiously waiting to see what the Fed is going to do there. Stocks in Asia traded mixed overnight as new data showed Chinese exports declined for the fourth consecutive month. And looking at oil, WTI crude oil is lower by about 1%, while gold is moving higher as the, again, December 15th trade tariff deadline looms. So as you can see just by the bullet points I read today, a lot, again, hedging on that December 15th trade deadline. And just some market recaps, year-to-date numbers. Again, so the S&P year-to-date up a whopping 27.9%. Dow Jones Industrial Average up 23%. And the NASDAQ Composite, believe it or not, up 31.8% year-to-date. Mind-blowing, staggering numbers. And hopefully we can build on those even further in December. That's going to conclude the first half of the show. Please stay with us for the second half of the show, the Your Money portion of our show, where we're going to talk about some important changes and what's new in Social Security for 2020. So stay with us, and I'll be right back. All right, thanks for watching the first half, the financial news section of our show. And as mentioned, this is the Your Money portion. We try to talk about specific topics to the investor at home watching. And today we're going to talk about, or I'm going to talk about, what's new for Social Security in the year 2020. Again, I'm not a Social Security expert, just going to give you some general guidelines, things you might want to be aware of for what's coming up. So I've got my notes ready, and let's begin. With 2020 coming upon us, those who collect Social Security or pay into the public retirement program through payroll deduction, we're going to see some changes. The Social Security Administration makes cost of living adjustments on an annual basis, and here's how those changes might impact you. So let's begin with those currently receiving retirement benefits. If you do collect Social Security benefits on a monthly basis, the amount you receive is expected to increase by 1.6% beginning in January. So a nice little raise for those receiving Social Security. According to the Social Security Administration, for the average recipient of retirement benefits, this amount will be an additional approximately $288 in the year 2020. Again, your specific amount will vary. That's just an average number. The result, though, might be different if you are enrolled in Medicare. For most Social Security recipients, standard Medicare Part B premiums are deducted from monthly benefit checks. In 2020, Medicare Part B premiums are going to rise from $135.50 per month to $144.60 per month. So that additional $9 will be deducted from your Social Security benefit each month. And if you have Medicare Part C, that's Medicare Advantage, or Part D, prescription drug coverage, premiums deducted from your Social Security check, those costs may be again, unfortunately, higher next year, reducing the net increase you'll receive. So a mixed bag of results for those receiving benefits. Potentially your benefit will go up, but deducted from that gain will be an increased Medicare cost. So your overall gain, you still may have positive gains there, but it might not be as much due to the increased drug costs. Moving on, for those Social Security early benefit recipients, if you collect Social Security prior to your full retirement age, which is at least age 66, for those born in 1943 and later, you may incur a penalty based on earned income. If you work in 2020 and you will not reach your full retirement age in that year, an important income threshold is $18,240, which is about $600 more than it was in 2019. For every $2 of income earned beyond that amount, $1 in Social Security benefits will be withheld. If you reach your full retirement age in 2020, you can earn up to $48,600 for the months prior to reaching your full retirement age before any reduction in Social Security benefits occurs. In that case, you sacrifice $1 of benefits for every $3 in earnings above that threshold. Once you reach your full retirement age, the earnings limit no longer applies to Social Security recipients. And the final people we want to talk about is the impact on income earners. So those not yet collecting Social Security who earn six-figure incomes may see a modest tax increase in 2020. If your income typically exceeds the maximum taxable earnings for Social Security, you should be prepared for this change. In 2019, any income earned by an individual beyond $132,900 maximum was not subject to the 6.2% Social Security payroll tax. But in 2020, that threshold increases to $137,700, which means an additional $4,800 is subject to the tax in 2020. The result is an as an added tax up to about $297.60 in the upcoming year. In summary, there's a lot of complexities with Social Security. Again, I just tried to give you the general bullet points today. So if it feels overwhelming, it is. No, you're not alone. If you have questions, be sure to contact your financial advisor, tax advisor, or better yet, the Social Security Administration office directly, who can guide you to specifics in your case. A lot going on in 2020 with Social Security changes. I'm sure a lot of you are interested in it. I tried to give you just some general guidelines to be aware of, but you need to take action and know what's going to change for you. Should you have questions or concerns beyond Social Security, feel free to always give me a call. Again, my office is right here in Orland Park, and I can be reached directly at 708-226-3412. That's going to conclude the second half of today's show. And for myself, Paul Munichel, and Ron Jankowski, who is off on vacation, wish you a good investment day, and we'll be back next week with new news and a new topic. Have a great week.